Hey folks, welcome to Market Wrap for the 25th of October. Okay, so we have earnings that came out after the bell on Chipotle Mexican Grill. Their numbers appeared good. I really didn't go into the data. I didn't trade the earnings report on Chipotle. We did trade Microsoft. They're down in the after hours session. Google really taking it on the chin. We're going to take a deeper dive into Microsoft earnings and into Google's earnings. Google, again, really taking it on the chin in the after hours session. But first, before we begin, I'm going to be doing a new format. The overview is going to be the free commentary going out to everybody on our YouTube channel. If you're not currently a member of the Contrarian Trader, sign up for the full in-depth detail analysis of the market in the back half of this commentary. And also get our trade alerts as well as the week ahead commentary coming up in the next coming Saturday. So let's get to it. The charts that we're looking at current at the end of the day are the Russell 2000, 15-minute time frame, good close, closed at resistance in red, up on the session 2.71%. We're going to talk about a market wrap later on in this commentary. If you remember, we're going to talk about where we believe the markets are heading from here, especially in light of earnings coming out after hours. Down below to your lower left, we have the 10-year yield. You can see that it had closed down 3% on the day, holding a 4 handle. And the US dollar, which is the lower center, the dollar finished down on the day by over a percentage point, whereas the VIX, which was very weak into the close, did ultimately close down on the day. As you might expect, S&P's up, VIX down, and it was down by 3%, again closing down below a 3 handle. So when we take a look at the NASDAQ 100, they closed up on the session, but as you might imagine, in the after-hours session, they are now getting clobbered a bit, and we're probably going to get some follow-through tomorrow. Now, taking a look at the S&P 500, the S&P 500 closing up on the day, but as the NASDAQ is selling off, we're seeing a little bit of a sell-off on the S&P futures as well. So let's take a look at Google up first. Now, Google is down significantly after hours. The market maker anticipated move on earnings was, this was higher early, it was around $8. I was going to trade Google. However, they weren't paying enough premium. So I said, you know what, we're going to walk away from this trade. And thank goodness that we did. The markets were telling you that they expected a pretty volatile move in Google because the IV percentile was at 83, whereas the IV percentile on Chipotle Mexican Grill was at around 63. Still elevated, but respectable for earnings, but not elevated. And Microsoft was at around 58. Let's bring up Microsoft now. Yeah, they closed at 57 on IV percentile. So back to Google. Let's talk about it a little bit. So Google headlines, Alpha misses on Q3 revenues. Wow. EPS, YouTube network revenue decline. And here's what's next. Ooh, good. Tease. What happened? Alphabet, third quarter revenue of $60.9 billion, up only 6%. The total came in below street estimates of $70.9 billion. That's $1 billion miss. The company reported EPS of $1.06, which missed. Wow, big miss on revenue earnings, which were expected to be $1.27. Alphabet reported revenues of $39.54 billion for its search division, $7.07 billion for its YouTube ads division, and $7.87 billion for its Google Network division within Google Ads segment. YouTube and network revenue were down year-over-year basis. Wow. Bringing overall Google ad revenue to 54.48, up from last year's 53.13. So it looks what's happening here is that you're seeing revenues grow, but they're growing less than what had been expected. Google Other, I think this is the cloud business, was up $6.75 billion last year to $6.9 billion. Oh no, this is separate. Google Cloud revenue, $6.87 billion, up from Wow, the Google Cloud business is really growing very, very well. So it looks as though the YouTube business and the display network business in general, of which YouTube is a part of, they took it on the chin. So the market maker anticipated move on Google was a little over $8. We're down below that now, and it looks as though we're probably going to move down lower. We've bounced here. We traded down below the third standard deviation Bollinger Band 15-minute chart. This is a bear flag setup. My bet is that we're going to move lower. We're probably going to bottom out. But what happens here when you get these disappointments on earnings, you don't get a bunch of institutional selling after hours because the spread between the bid and the ask is far too wide, as noted by the volume bars. Note, we're down significantly. They're just marking down the price because the volume bars are very light. So expect a bit of a bloodbath tomorrow morning on Google. Let's move on over to Microsoft, of which we are invested in using call options and put options. However, we didn't buy the position. We sold the position, meaning we generated cash flow. So while we're down in the after hours session, I already took a look at their data. Their EPS they had revised downward EPS. It came in as expected. Revenues came in as expected. But I think they're down in sympathy with Google. Let's see if we have any latest and greatest updates, perhaps forward-looking guidance. Yeah, Microsoft earnings declined, sales growth amid weakened PC sales. They beat on the top and bottom lines, but not enough. Microsoft stock slips despite earnings beat as cloud growth slows and misses projections. All right, so their forward-looking guidance is not looking good here. So what's hampering Microsoft is forward-looking guidance as well as sympathy with Google. Now, our trade here is that I'll show you this. Here's our trade here. We sold to open the 280 calls expiring not this Friday, but next Friday. Simultaneously, we sold to open the 220 puts also expiring next Friday, not this Friday, following Friday. Both options expire on November the 4th. So right now we're within the anticipated market maker move. So assuming that we open tomorrow at around where we're trading at current, even with a bias even towards the lows at 242, this should be a profitable trade. We're going to try to close out this trade as early as possible tomorrow, taking advantage of IV crush, meaning the implied volatility going into earnings was at the close 57%. It depends upon the market really. If VIX spikes up tomorrow, you may not see a drastic pullback in implied volatility. But if the markets close flat, slightly down, slightly up, you should see implied volatility on Microsoft come in, making the options decline in value. We could close out the trade for a profit and look for the next trade. So members, what we're going to do now is we're going to segue on over and into market wrap, and we're going to talk about the markets as a whole, bond markets, stock markets, and we're going to talk about our positions, and we're going to talk about strategy from the data we've just observed. How do we now take all the data, all the information that we've just absorbed, and then factor it into what we're going to do tomorrow, later this week, and perhaps even into next week? So members, let's get started on Market Wrap. If you're not currently a member, 14-day free trial offer, link below, over to the Contrarian Trader. Okay, folks, welcome to Members Market Wrap. And we've already gone over the futures action. Now what we want to do is we want to talk about strategy. The futures are now down in the after hours session. Do we get follow through to the downside in sympathy with Google and somewhat to sympathy with Microsoft? In all probability, the answer is